the bond market went bid, 2s and 5s, 5s the lowest since June of last year. A salient reminder that there is idiosyncratic risk or something more protracted in commercial real estate. For you as a house, do you see it as idiosyncratic risk or something more pervasive that I should be wary of because the market just bought bonds and didn't bother to ask any questions? For you, you're up some on regional bank, idiosyncratic or something more malevolent?
So, listen, I think more idiosyncratic. But I think the markets are super sensitive to what happened and the impact that had on rates, the impact that had on the broad financial system. So I think you have to respect that. I think the market's got a little overdone on that. Listen, I think there's something that's really important around this. I think the number is 4,750 banks in the U.S. I think the country with the second most banks is Russia or the U.K. at 300 and something. There are a lot of local banks in the United savings and loans, credit unions. My sense is going to be consolidation. It's really hard when you fund yourself at these high levels of yield and your earning assets are significantly below that. There has to be some consolidation. There's going to be underwriting dynamics that are difficult, particularly in commercial real estate. So, listen, I think you're going to see a consolidation of the banking system. I think it can happen in a relatively stable way. But if you said to me, this is the last of these sort of events globally, including Japan and otherwise, for lending that happened in and around commercial real estate, I don't think this will be the last one. No way this is the last one. And by the way, it will make people nervous, but I don't think you're talking about systemic shock.